Hello, I'm Vadani Ariyam. In this video, I'm going to talk about control accounts in bookkeeping. A control account is used to check the accuracy of the postings to a particular ledger account. The term self-balancing refers to the inclusion of a control account, normally kept at the front or back of the ledger and used by the accounting staff on the total balances extracted from the ledger. In addition to the work of the bookkeeper, also this system used for internal audit purposes. Control accounts are general accounts that summarize a large number of transactions. As such, they are part of the double entry system. They are used to prove the accuracy of the ledger accounting system. They are mainly used with regard to the receivables and payable balances. The common types of control accounts are accounts receivable and accounts payable. Accounts receivable usually maintained for when you sell goods on credit, that is for the amount due from debtors. In the same way, the accounts payable is the amount that you owe to your suppliers. You can also use stock control account that you use to summarize the transaction in the inventory and stock. Sales ledger. When you sell goods, you will raise the invoices for your own records. Those invoices entered in the sales ledger as a debit entry, and when you receive payments from the customer, you will credit the sales ledger and debit the bank account. Thereby, it will show that there is an outstanding debt owed to you. If you have not received the money when you are closing the account for that month, the balance on the sales ledger will show as a debtors control account. The balance on the debtors control account will add to the assets account in the balance sheet. Purchase ledger. When purchase ledger made by the business receives invoices and those recorded in books called purchase ledger. Business maintain double entry system unless it is a very small business. Therefore, the debit entry entered in the purchase ledger, thereby cancelling the original credit entry when the invoice received from the supplier. If you have not made the payment by the end of the month, the balance on the purchase ledger will show as a credit balance on the creditors control accounts. That balance added to the liabilities in the balance sheet. The purpose of the control account is to keep the general ledger nice and clean without any details, yet contain the correct balances to use the financial statements. Many of the accounts seen in the financial statements take cash, for instance, shown as the control account in the balance sheet. I hope you understood about the control accounts in bookkeeping in this video, what I have been talking about. Thank you very much for listening and watching my video. Thank you. Bye for now. I will talk soon. Thank you.